Let's continue our discussion about investment policies. The next investment policy is investment for fixed income. Some investors have priority to invest their money in the fixed income assets. So investment for fixed income are usually government bonds or tax-free civil obligations. However, it seems fairly evident that investment, whether in bonds or in stocks, can offer very high return only at the risk of the loss. And in case of the fixed income, there is low risk to lose the investment, but there is not high expectations of return. Only possible exception as risk-free investment may be made by in favor of well-protected government bonds or preferred stocks, and we can understand that they provide that risk-free status and they provide the certain amount of return. They have some attractive status and the expectations of high return is very low. Next investment policy is purchasing through the investment funds. Investors may properly purchase securities through the investment funds. It is logical for individuals and small institutions that invest indirectly by buying investment fund shares is interesting policy, and in that way they can have expert management for their portion of portfolio, like investing in BlackRock, Fidelity, JP Morgan, in Allianz, in UBS, can bring the expert management. Those investment funds, they are very professional, but they also charge certain amount of commission for their management, for their services. The other investment policy is long-term price appreciation versus income. Normally, investors have two choices when they dedicate their capital. First one is the long-term price appreciation, when they put money in some business, in some securities, or in real estate, and wait long time in order to benefit from long-term appreciation. And second one is continuous income, and investors have to make decision which one they choose. They want to put money and wait for a long time for appreciation, or they just want to get continuous and little income during time. For most investors, there would be a tax advantage in realizing profits in the form of the long-term capital gains rather than choosing ordinary income. Some investors choose this option. Some investors choose just ordinary income option. So it's another investment policy, and the investors have to make their decision. Next one is trading in ups and downs of the market. Next investment policy, the practice of buying securities when markets is expecting to advance and selling when it is due to decline in very short time period, in our jargon calls speculation. In finance we call that activity speculation. Basically, this policy is purchasing stock at low levels and selling them at high levels with purpose to make quick profit. Well, continued success in speculation is very fortunate for stock exchange, and small minority of people can trade successfully. Regardless of preparation and method, success in trading is either accidental or impermanent, or due to the highly uncommon talent. So somebody can predict those ups and downs always correctly and make the money. I doubt that. I don't believe on that approach. And big majority of stock traders are inevitably doomed to failure. They might make money or they might lose money. And this is very stressful activity, and as you can see, many times speculators lose money. And if we compare these people, the speculators, with investors, we can see that the person like Warren Buffett, who invested in long term, who found good businesses, who cares about business, who analyzes the business and then invests in order to get those returns, the appreciation in a long-term perspective, he wins in the long-term perspective. As you can see in his annual meetings, he enjoys playing guitar. He welcomes every year his partners in investment. They really care about their businesses. They share their experiences. They are really long-term investors. And I could say that investor enjoys his life with no stress and with less risk of losing money. Thank you, and if you have any question, please don't hesitate to ask. Bye bye.